So let's discuss an example for the current assets, how it happens. So for example, a businessman has purchased stock for a cash. Now that stock he has sold it to X on a credit basis. So X is now the debtor for the company. Now once X will give us the bills receivable, the debtors would be converted into bills receivable. Now first stock has converted into debtors because he sold. Debtors are converted into now bills receivables. Now once bills receivables would be received from X, the money would be received, it will be converted into cash. So this is the entire cycle. All the current assets will be converted into cash at a shorter period of time. So that's the example. Now current assets are usually shown in the balance sheet basis the order of liquidity, which are the highly liquid assets will be shown above, and least liquid, which are difficult to be converted into cash, would be shown below. So for example, cash in hand, cash at bank, bills receivables, short-term loans, and prepaid expenses. So this could be the order in which it is mentioned in the balance sheet. Now out of the above assets, investments and stock are shown at cost or NRV, whichever is lower. Cash in hand, cash at bank would be shown at the actual figures in the balance sheet, and the bills receivables and debtors are shown at the estimated realizable value. So you will make provision for doubtful debts in case there are. You will come at the estimated realizable value of them and show it in the balance sheet. So we will discuss about non-current assets now. What are non-current assets? Non-current assets are the possessions owned by the organization for the long-term purposes. They are not owned or held for sale. So for example, land and building, plant and machinery, investments which are for long-term purposes, they are all called non-current assets of the organization. Now, I want to discuss a very important point regarding the prepaid expenses. So prepaid expenses will never be converted into cash but are still a part of current assets. Why? So these are the expenses which you've already paid in advance for the services you'll be going to receive in the future. So these are called current assets and they will be shown in the balance sheet. Once these services are received, these will be expensed off.